I need to add this to my journal today. I didn't even look at the 2000 tick chart today to help me decide the trades that I needed to make. And I've been noticing that it's been giving me a better clarity of the trade setup. And I've just traded completely on the 1000 tick chart today. And I want to make sure that I go over each trade real quickly to see if I would have taken those trades if I was watching the 2000 tick chart. So here's the first trade right here. We shorted as it hit the red zone, the resistance zone. I don't have a problem with that one so much, but the entry, basically, I just broke even because I got in, and it came back up and stopped me out before it went to 1-to-1. That's just unfortunate. What I've gotten in a little differently, if I was using the 2000 tick chart, there is this little area where the pintail comes down. It breaks the trend line, but then it shoots over here and goes up. It's possible I would have tried to short as it came back down as soon as it crossed back down. So I probably would have shorted it 49.97 area, say 49.9750. Let's see where 49.9750 is over here. And you know what? That would have been a better place because I would have been in earlier, and my stop loss would have been, my break even would have been higher, and I probably would not have been stopped out right here. So using the 2000 tick chart would have helped me on that particular trade. Let's go to the next trade area where we were trying to, use momentum or the trend line breaks here on this particular one. Let's take a look at it because we really need to know, is the 2000 tick chart really helping or not? So here's a couple trades up here that we took. Now I can hold my cursor over this. It'll tell me which bar. This dip down, you see this dip down right here, up, down, up. Okay, that's taking place right here on this candle right here where it went down and up, it went down and up. Now, taking a trade right here, I would have wanted to see the breakout bar. I would have wanted to see this retested. Now, if I would have gotten in down here as it bounced off the bar, I would have probably had my stop a little bit lower than that. I'm trying to figure out where I would have had my stop, because it's possible it could have still stopped me out. I mean, if it was jumping around and bounced off the trend line, and I jumped in, say somewhere up here, and then it turns around and comes all the way back down, that's hard. It really is. But if I was watching this one as well, and I think that's what happened with me on this one, is that it was coming down. I got in right here. It didn't come down all the way down to the trend line, you see. It didn't come all the way down to the trend line. I wanted to get in early. I got in early, and I put my stop a little bit. Well, I put my stop at the bottom of this candle, which is where 500875. 500875. Let's see what that is. 500875. So yeah, it just stopped me out right on the bottom. I don't know how I would have played that, to be honest with you. I don't know. It worked out for the trade, scalping upwards. But this next one though, I think I could have completely avoided because I was trying to get in on a breakout right here on a market. This market was choppy and sluggish right here, and I put my stop right underneath that candle. That's different when you have a strong momentum. Things are going straight up. It breaks a certain resistance area with consolidation, and it's just booking it. It's flying. That's different. But this is not that case right here. Make a note that this is a completely different market in these 10, 15 bars than a really fast breakthrough resistance momentum play. And I was treating it like a momentum play because it did have momentum. It just slowed down right here. And I got stopped out in the very next bar. Now, let's see if I could have avoided that had I been using this other, right here is the breakout, and I got stopped out on the very next bar. So right here, I got long right there, and I stopped out right underneath that candle. So I'm not even sure. I'm trying not to take trades that break out, but if I do, I want a small stop loss. But what I'm trying to do is buy at the retest, at the retest, trying to buy at the retest. And that was kind of buying at the breakout side. Sometimes buying at the breakout side works when you got a lot of good momentum. So I'm not going to say never do it. And we had a lot of good momentum coming up. This was a great place to do some of those kinds of trades, but then it slowed down. Once it starts touching the 20 and the 20 starts going sideways, look at this. Going under the 20, that's surely a slowdown. That's a different kind of market. So I don't know. I really don't like losing on these two trades right here. If I just was a little bit lower on this, it would have worked out great, and I never would have took this second trade. So one trade led to another trade. Let's take a look at this right here. So the breakdown of this trend line here on the 1,000 tick chart, somewhere in this area here, it did retest. I like the fact that I got in. I just broke even too fast, you see, because it worked out. And then I wouldn't have had to take the next trade. Both of these trades were zero. Break even, break even. It seems like I could have made something on that right there. I just kept my I don't mind breaking even on the top part because it really didn't go anywhere. But the one down here after the retest, let me see what would have happened if I would have kept my stop right here and I got in right here. Where would my risk reward be on this? Because I need to know. Yeah, I might have even gotten 2 on it. I know I would have gotten 1 on that if I had my stop all the way down underneath this test candle, the candle that tests that pivot. So I got to get better at this. Let's look at the 2,000 tick chart. Would that have helped me at all? This is the trend line. This is the retest. So that's pretty good. The candle broke out and then it came down and retested, right? So get in, you kind of want to get in somewhere when it either turns green. Let's see, 500595, 50095. So yeah, I could have probably gotten in a little lower. Yeah, I could have gotten in a little lower on that if I was using the 2,000 tick chart. I'm pretty sure I could have, because it turns green after it comes down. It starts turning green at 5006. 5006. So over here, let's see where 5006 is. And that's lower than where I entered. Yep. By about 2 ticks, which can make a difference sometimes. Yeah. So anyway, I'm just trying to compare the 2,000 tick chart to the 1,000, and it's been helping me avoid taking a lot of bad trades. So I think, is that the last one? Let's double check here. No, I got one up here that I did. Let's take a look at that. Goes up, comes back down. Why did I even take that trade? I think I was trying to bounce it off of the 8 EMA, and it just didn't go anywhere, So I just got out as soon as possible on it. Maybe I realized it was a bad trade. I'm trying to figure out where that's at over here. So it's right here in this area. There's no reason to be taking a trade right here. And unless I was trying to, it's coming back down. What's it bouncing off of? I guess these pivots here, but it's just not a good setup. I was not using the 2,000 tick chart. I made that extra notes in my journal about that for tomorrow when I read them. Make sure I'm aware of that so I can stick to that. I got to make that a habit. Use the 2,000 tick chart. It looks cleaner. You can read the candles and compare the candles to these candles, and you can see the flaws and the little errors that are in the 1,000 tick chart. All right. Sometimes you can't see certain things on the 2,000 tick that you can on the 1,000. So it's kind of good to have them both, I think. All right. So anyway, live and learn, get better by the grace of God.